not always necessarily wrong.
Yeah.
But it's really easy to get caught up in the spin of the emotion and just make quick decisions. And we talked about a little bit how a lot of what factors into that is the amount of social media that we consume.
So yeah, there's a lot of that shiny object out there. This one's the one, and it can be exciting.
Mm-hmm.
Some of these people really know how to market and really make it look awesome. During the ups and downs, he didn't chase something else. He hung on to something that he knew had value, and he still continued to receive the benefit.
Hello, everyone. Welcome back to the Legacy Life podcast. Today, we are on our quarter century episode, number 25.
Yeah.
Really excited to be here with you guys today.
Yeah.
Last week, we had talked about, or earlier today, we were shooting 2 episodes in one day. They're like, oh, they're wearing the same shirts.
Yeah.
Not trying to trick you guys. So last week we talked about, how people react to the market sometimes, and how many times when you make decisions based on emotion,
Fear, anxiety, depression,
and especially when you're not talking to somebody about it and just like processing it out. It's like, this is what I'm thinking, because you're not always necessarily wrong.
Yeah.
But it's really easy to get caught up in the spin of the emotion and just make quick decisions. And we talked about a little bit how a lot of what factors into that is the amount of social media that we consume, and the fact that social media is oftentimes just a constant highlight of people's lives. And so it's just a constant, like, I want this, I want what that person has. I want what this person has. And it's just never ending. And it is so quick. It's like 30-second sound bites. And so you're just like constantly taking in all of this false reality of what people's lives are really like. Like, you're not seeing every aspect of your life. You're only getting the highlight. And so oftentimes that can factor in to the decision-making process. So we're going to talk a little bit about another aspect of this topic today.
Yeah.
And it's something that you call the shiny object syndrome.
Yeah.
So if you want to start to get into a little bit of that and explain a little bit what you mean by that.
Well, shiny object syndrome is what kind of like, look over here, the next best thing we found. This is it. This is the one that's going to, give you the breakthrough. Now, there are a lot of great opportunities out there, but talking about the social media consuming of information, there are tons of ads, right, telling you it's now, it wasn't just crypto. What were the other ones called, like Dogecoin? And
Dogecoin was really big a few years ago.
Yeah.
There's NFTs now and all these different things.
Right.
Yeah.
All these new things that people are really interested in trying to get in and learn about. And a lot of people get caught up in that this is the new trend, right? And they feel like they got to jump on. And a lot of times we can convince ourselves, okay, I finally found it. I'm early. Like, I'm on the front end of this thing. This is the time to get in. This one's going to be different.
Yep.
It's, this one's going to rocket ship to the moon.
Yep, to the moon. Yep.
Yeah, right. And here's the thing. Some of them might.
Right.
I know there are some people, I heard this story. There was a guy who was learning a new way to trade in the market, some sort of a day trading type scenario.
Sure.
And this is a friend of mine who was telling me this, and he had gone to this conference. He had learned about it. He was, applying the principles that he had learned, right? But he ends up, like they told him, when you're doing this, don't do these 2 things when you're making these trades. Well, he did those 2 things, and he got himself in potential trouble in the trade. And he's like, guys, you got to help me get out of this trade. I might actually end up losing a ton of money if this doesn't work. And so they're trying to help him look at all these different ways. Because if the price hit a certain amount in the market I think it was an option trade they were doing. If it hit a certain price, he was
done for.
He was done for. And so it's nearing it. They're like, well, if you exit here and do it this way, you might be able to salvage. And they're trying to help him get out. Well, it ends up where it never hit that price. he was able to end the contract and the option expired before it hit the the D-Day.
Right. Yeah.
And he ended up making like $1 bazillion, like a lot of money, right?
Yeah.
And so instead of being like, "Phew, thank you guys," you know what he said? He went out there, wrote a book, and said, "Look, I turned this amount of money
Oh,
into $1
wow.
billion,
Yeah.
right?" And he went out there and tried to make himself look like this genius.
Mm-hmm.
Because sometimes lucky situations like that make you look like, man, this guy knows what he's doing.
Exactly.
Couldn't believe it.
Wow.
But that's what some people do.
It is.
And that happens. And there are some people who crack the code and do really well, but it doesn't duplicate in other people's lives as easy. It's just something they understand.
Right.
Right? And you're going to say something? Go
Right.
ahead.
No, it's just like thinking of that story. It's kind of like funny. It's like, wow, like he really did that.
Right.
But it also kind of sucks. It's like things like that
Yeah.
kind of give people like us a bad rap.
It does.
You know what I'm saying? It's like,
Yeah.
like
Exactly.
I would never do that, but it like kind of like, you know what I'm saying? Like,
Yeah.
but
Exactly. I mean, I there's a lot of times people will ask, so how do I know you're not Bernie Madoff?
right.
I guess you don't. I don't, but
I don't have a book.
Yeah.
I don't have a book out there.
yeah. Well, when your money transfers, you're not giving it to me directly.
Right,
It's going
exactly.
to a custodian.
Yeah.
But, yeah. So yeah, there's a lot of that shiny object out there. This one's the one, and it can be exciting.
Mm-hmm.
Some of these people really know how to market and really make it look awesome.
Yeah.
And some of them might be great opportunities. I'm not here to badmouth everyone's opportunity they're promoting out there. There might be some good ones out there that work for you.
And yeah, there are good ones.
Yeah. But, a lot of them by and large, we've seen them wreck a lot of portfolios. There are scams out there. I've met people after the fact. They've come and said, well, I met a guy who lost half of his portfolio to a crypto scam.
Mm-hmm.
And he's like, my wife and I don't know what we're going to do for income now. And she wasn't happy with him, and it was a mess. Right? Those things happen because the shiny thing looks good, and so we're going to do it, and boom, they end up getting scammed.
Nothing is better though when in those situations you're able to help them
Oh yeah,
and figure it out.
yeah, that was a good feeling. We were actually able to help that family out.
Yeah.
To their surprise, and that felt really good.
Yeah.
To be able to do that.
Right.
So, you're at a cookout. I'm just going to call this guy Tom.
Okay.
Okay. He's legacy-minded investor. He's doing dividend portfolios, really conservative, consistent. He goes to a cookout and his buddy says, hey, real estate, crypto, we found this thing, right? So Tom's like, man, I'm in. It's my friend. We're eating burgers and drinking beers together, and
Right.
let's do this. And 2 weeks later, his investment turned into about what was my analogy? It was worth about as much as the barbecue sauce they were putting.
Yeah,
in the
exactly.
And he was like, oh, right. So that happens. So when it comes to day trading and the quick fixes and the quick turnarounds, and you're going to scale and 10x your money in 3 months, about 1 in 10 day traders are profitable after, I think, what's like a 6-month period. About 1 in 10 are actually profitable.
Wow.
So just know that. I mean, because day trading and these quick turnarounds and a lot of these programs really require sometimes not just skill, but sometimes a whole lot of luck. Because there's a lot of speculation going on in a lot of those programs, especially if it's new and there's not a lot of history and a lot of data to back up the claims that the investment is supposedly making.
Exactly.
They might wrap it in real estate and say, well, real estate has historically, yeah, but what's their approach to investing in the real estate, right? You got to go another layer deeper.
Right.
And a lot of people don't do enough due diligence. It just looks good. They jump in.
Yeah.
But here's one. Back in the 1960s, the average hold rate for like a stock portfolio was about 8 years. The hold of stock for at least 8 years was like the average hold time. Today, 5 months.
Wow.
Now, don't tell me that social media doesn't have a lot of impact on that.
It for sure does.
Yeah, you're holding the stock, you're scrolling. Oh, now's a new opportunity. Sell. Now I'm over here. Mm-hmm. People are they're like a pinball machine, I like to call it. They're just being bounced around.
Yeah.
It's because a lot of people are just chasing the next big thing. Meme stocks.
Yep.
This ETF, AI.
Right.
Uranium deals, NTFs, you name it.
I remember It was like 2020 or 2021. It was when GameStop,
Oh, yes.
there's like this whole like subreddit of people or something like that just like convinced everyone to just like pour all their money into it, and then they're like shot, and it was
Yeah,
like
they shorted the stock,
I know,
right?
and the whole meme was like GameStop to the moon or whatever,
Right.
because it's going out of business or whatever.
Screw the short sellers.
Right, exactly.
Yeah.
Like just social media has so much power to completely shift
Yeah.
things.
Yep.
There's no patience because it's the FOMO. Everyone's afraid to miss out on the next big thing.
Right. And that's the real cost of FOMO is millions and millions of dollars being lost.
Yep.
Disillusionment, people getting screwed, right? And because social media is really good at creating the dopamine hit of excitement.
Mm-hmm.
And dopamine fuels your impulses, impulsivity. And that leads to speculation. Because let's be honest, people might say, I'm making this new investment in this new crypto thing or this. I'm not bad mouthing crypto. Because some people do really well in it.
Sure.
I'm just saying in X, it doesn't have to be crypto, just X, whatever the new shiny thing is. And they're like, this is, but it's speculation because people don't necessarily really understand what they're getting in. And that can lead to stories like Tom's at the
Right.
barbecue,
Yeah.
So shiny object syndrome can feel like a strategy, but really it's fueled again by the other side of the emotion. Last week was the negative emotions. This week it's the positive emotion
Yep.
that can lead to it. And so, if your portfolio looks like the BuzzFeed's list of the top 5 trends, that'll totally work out this time. Time to take a second.
Yeah,
look.
might want to avoid that.
Yeah.
Mm-hmm.
So, again, what works? We think something that looks more like a little more on the boring side and consistent works a lot better over time. And I think you said it earlier. The tough thing people struggle with today is the fruit of patience.
Yep.
They don't want to wait. Everything has to be quick and right now. Because I can go on my app and I can order breakfast and lunch and dinner and have it in my house in 15 minutes.
Right.
Yeah, everything is now.
We're cursed with convenience.
We are cursed with convenience. That's a great way to put it. And so, again, we like, people, we have clients who buy real estate and they have rentals and it provides reliable, consistent income because they find good locations, like things like that are dividend stock portfolios with good, solid companies long-term that can provide the consistent cash flow and the reinvestment and the compounding. Those things have historically always shown to outperform the shiny speculations because a very, very small percentage of people get into the shiny object things and actually do well. A very small percentage. But they're trying to tell you now, if you take this course, you too,
Yeah.
And most people don't finish the courses and most people don't see those results.
Yep.
So one of my favorite stories, and we've told stories like this in some of our other episodes, but, the man who inherited 100 shares of stock from his dad and didn't stop, the dividend income, didn't sell them. He just hung on to them, continued to receive the dividends, and through all the different splits and the reinvestments that the company made on their stock, he's now receiving income out of those dividend stocks more than his dad originally invested each year.
Yeah.
Right? His dad might have invested a few $1,000s to buy those shares. He's now receiving 5 figures of income out of that stock portfolio every year in just income.
Craziness.
Because he hung on to it. He didn't panic during the ups and downs. He didn't chase something else. He hung on to something that he knew had value, and he's still continuing to receive the benefit. So legacy doesn't come from adrenaline. It comes from patience.
Yep.
And I think that's the key thing right there. So what shiny thing are you chasing right now? Are you sure it's a good investment? We're not telling you can't do those things because we haven't considered your situation as your fiduciary. But if you want to talk about it to see what would be a solid plan for you, get to the show notes, click the link to our calendar, get on our schedule so we can sit and have a consultation with you for free. We'll go through your situation and see how we might be able to help you. We'd love to hear your comments. you please leave them. And if you haven't subscribed to the channel, please hit the subscribe button. And you can find us on all the other platforms like Spotify and Apple Music as well.
That is one investment, the subscribe button, that's completely free.
It is. And you're not just speculating.
And you're not just speculating.
That's right. Yep. So thanks, everybody, for watching. We'll catch you next time.